All right, guys, what's up? It's Dan from Crypto Camacho. And hey, guys, today I wanted to go through kind of a very simple yet powerful checklist for trading. Now, I don't use this checklist kind of as a religion or as a Bible, but I do follow it fairly regularly. I'm still trying to develop the exact or the best kind of process and strategy for how I actually use this checklist. But I want to show you some of the things, some of the indicators, some of the techniques I use to enter a trade, or before I enter a trade, whether it's a long trade or a short trade. There's kind of a series of things I go through and check on the charts in regards to technical analysis that I go through before making a trade, okay? So I want to go through these right now fairly quickly just to give you some context of how I look at the market, okay? So typically when I'm trading, the very first thing I'll look at and keep in mind always is volume, right? So volume is kind of number one. I want to look at volume. I want to make sure that volume is high and is significant, because anytime there is significant volume, as you can see kind of right here, there typically is a bounce, right? Especially if it's bullish type of volume. If you look back in the chart, you always want to make sure that volume is picking up before entering a trade. You could have every other indicator lighting up green, being fantastic, but if there's absolutely no volume, the price is not going to move, right? So that's kind of first and foremost, number one. Number two, what I really look at is the EMA, okay? So EMA is the moving average. So I look at a couple different moving averages. Typically, I look at maybe 2 to 4 different moving averages. On this particular chart, I have a 55 moving average in purple, and I have a 200 moving average in kind of a white type of color, right? What I typically look for when I am shorting a particular cryptocurrency is I look for the death cross, okay? So this is an example of kind of the death cross, right? The 200 moving average is crossing with the 55 moving average. It's now coming on top of the moving average or the EMA indicator, which indicates that there is a bearish trend down, right? Generally speaking, there's a bearish trend down whenever you see this crossover, right? Okay, so on the flip side, when you see a bullish run, let me zoom down into a different time frame so you can kind of see what I'm talking about. Typically on a bull run, you see the trend lines crossing the other way, right? So you see the 200 moving average going underneath the 55 and the 55 going above the 200 average, and you typically see a bull run after that, okay? You can do this and look at any chart really, again, right here. Let me just circle a couple of these for you guys so you know what I'm talking about. There's one right there, and we see an uptrend, right? You see one right there, and you see an uptrend, right? Every time there's these crosses, another small one right there, you see an uptrend, right? So want to make sure you are aware of that. That's EMA. That's very, very important to keep in mind when entering a trade, okay? The next one I want to show you is the MACD. Okay, so MACD is really the histogram, okay? Histogram. So MACD histogram is another very powerful indicator that I use to establish trends, right? So looking over here, let me just jump into my MACD. So if you look up at top here, here's the MACD. I have the histogram enabled and I have the blue and red line enabled. If you look at this chart really, really carefully, whenever the red line is crossing with the blue line, it indicates that a trend is likely to move upward, right? And if you look down here, if I just make like a quick, let me make like a little quick, here's where, I don't know if you can see that very well, but here, let me make that a little bigger. That's where it crossed right there, okay? The red line crossed with the blue line, and we see a spike, right? So that happened when the price of Bitcoin was around 6,300 approximately. Shortly after that, you know, many candles after that, we see a spike all the way up to 7,600, right? So that's one very, very clear example of how MACD can help you actually identify an upward trend, right? And you can see typically, actually I would say always, the crossover needs to happen in the negative side of the histogram, right? So the bottom half right here is the negative side. The top half up here is the positive side. So this typically only works when the histogram, when the red and blue lines are crossing over each other on the negative side of the histogram, okay? Let's look at a couple more examples, okay? So let's look at any uptrend really. Here's another one right here. Let me put a little poll. Again, right there is another. Let's see if we can find another one. Right here is another. And you can see that this is a very, 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 very powerful indicator that often is correct at predicting an upward movement, okay? So we see, I'll just circle this. I know this is a little bit difficult to see here. Sorry about that. So that's where it would have started. That's where it would have started. That's where it would have started. And you can see after every circle, there is a jump, right? So that's another very, very powerful indicator that I use to help me identify if we're going to see a bounce or not, okay? So that's another one. Let me go back to my, my notes here. All right, so we got volume, we have EMA or moving averages, we have MACD or the histogram. Now there's RSI. RSI is a very, very powerful indicator, which I often talk about. Typically when RSI is trending up or you see a bullish divergence upward or on the positive side, that's an indicator that the price and the power or strength of that price, of the support of that price is going up. It's increasing, right? So in this case, you can see the RSI is going up on the day chart. If I look at like historically, let's look at this, right? So here, move this out of the way. Let me go back over here. Delete this here real quick. And okay, so let's use this as an example, right? So RSI was bullishly diverging here, right? There's a little more to this, but I'm just trying to give you the general gist of this. So the RSI was bullishly diverging right here, right? So you can see right here, it just kept diverging bullishly, right? Which indicates that there's likely going to be a bounce to the upside with that type of strength or support from the RSI indicator, right? When you combine the RSI indicator with the MACD indicator, and if possible with the EMA and volume indicators, it's a very, very good chance or good high probability that you're going to make a successful trade, okay? So let's look at another example right here. I'm gonna show you an example where kind of all the stars align a bit. Well, in this case, it's not quite so easy. Let me go down and let me find a better example for you. Let's see. I want to make sure I find a good, really good example. Okay, here's a pretty good example right here. Actually, that's not a great example. Can't find a good example. I'll find another example for you. I'll record it. But generally speaking, the more indicators that you have that are in confluence with one another, the higher your chances or the higher your probability is to make a successful trade. So that's a very, very simple checklist that I use before entering trades. And I often will cross-check these different indicators by going back and forth between different time frames, right? The lower I go down in time frames, the less strength that the trend has, or the less indication that the trend will actually break in the direction I'm saying or thinking. The higher time frames, like if you have a high time frame of a day chart, for example, and we see a crossover like we're seeing right here, there's actually a pretty good indication that the price is going to go up, even just a little bit, okay? And here's actually a pretty good sign of that with Bitcoin as we speak. So there could be a bounce in Bitcoin coming up soon because you see a crossover is about to happen on the 4-hour chart, or actually did happen on the 4-hour chart. If we go to the 1 day, hasn't quite happened yet. If we go to the 2-hour, it has already happened, right? And it already happened back here, maybe, a couple hours ago, half a day ago. And look, we see a bounce, in accordance with that crossover, which we call the golden cross, okay? So let me know if that helps. I hope you guys use these. These are very, very powerful indicators. I'm going to dig into them a bit more in other videos, but I wanted to give you a very quick checklist of things you can check, things you can look at before entering a trade to increase your probability of making a successful trade. See you guys.